Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Hong Kong SmartCon 2024 by Chainlink. I'm here with Sean Lee, co-founder and CSO of IDA. We're here to discuss developing the Hong Kong Web3 market. Sean, it is great to have you with us. Welcome to Trade Talks.
It's great to be here. Thank you for inviting me.
All right, you got it. Let's talk about Hong Kong's recent policy address announcing that the city would develop blockchain technology-based electronic payment ecosystems through a stable coin issuer sandbox. What's your view on that target, and how do you think Hong Kong can achieve that goal?
So this is actually quite in line with the China strategy in regards to enabling blockchain-based finance as part of their future goal in expanding that into the international trade area. So naturally, a lot of that aspiration and also the technical implementation has extended here into Hong Kong. So when you see the policy address talking about kind of blockchain-based payment network, that's actually adding a layer on top of the existing very robust digital and mobile payment network that already exists in Hong Kong. And the objective is to be able to really create some openness and connectivities around both, not only in Hong Kong, but also connecting that into cross-border payments, because Hong Kong naturally acts as a gateway in and outside of China. So a lot of the international trades are naturally flowing through this, and blockchain creates a very fundamental infrastructure to enable that to happen.
You know, it's interesting, Sean, there's a lot of comparisons between Hong Kong and Singapore, and the policy on crypto was one of the key differences. Singapore moving quicker than Hong Kong. Can Hong Kong catch up, and does it have to be the same type of solution?
That's a great question. People love to compare Hong Kong and Singapore. Obviously, these are two city-states, right? So a lot in common in terms of the financial services background in the industry and also capital markets as well. But if you look at the two cities, there are two clear differences. One is that Singapore is predominantly focusing around the Southeast Asian market. So you see a lot of the Indonesian, the Malaysian markets working with the Singapore MAS policymakers in driving a lot towards that Southeast Asian kind of regional trade and crypto policy synchronizations and so on and so forth. Hong Kong obviously is quite different. Hong Kong is part of Greater China. So there's a lot more around capital inflow and outflow using things like blockchain-based technology, stable coins, and otherwise to facilitate that. So from a policy perspective, there are a lot more similarities than differences. Case in point, the stablecoin regime that has been enacted in Singapore and also near finalization here in Hong Kong, both of them allow you to actually issue multi-currency stablecoins. That looks very different than the MiCA regime in the Europe and Japan regime as well. So you see a lot more similarity in that regard. Some of those have advanced further in Singapore. Some of them have advanced further in Hong Kong. So I think these two city-states are actually playing to each other and really pushing each other forward as a Asia financial hub that are now focusing around being also digital asset hubs.
And I want to get to that. I understand you're running a startup on creating a stablecoin based on the Hong Kong dollar. Let's talk about Hong Kong and how it's developing the Web3 market, and what innovations are you bringing to the city?
Great question. So the funny thing is, right, if you look at the Hong Kong dollar, it has been a stable coin for over 40 years. The Hong Kong dollar is actually pegged to the US dollar, right, and it is actually issued by 3 commercial banks. So there are 3 issuers, and with the underlying currencies that's pegged to a fiat currency. So Hong Kong dollar has always been a stable coin. It just hasn't been on a blockchain infrastructure. So a lot of what we are doing is really bringing that next layer of digitization on top of the Hong Kong dollar. Now the interesting thing about that is the Hong Kong dollar is both used obviously here in Hong Kong, but more importantly for international trade. It is one of the most used international payment vehicle, again, for payments inside and outside of Hong Kong. So the work we are doing at IDA is really driving towards that. Can we have our Hong Kong dollar stablecoin facilitate on-chain foreign exchange trading with other currencies that are also regulated in other jurisdictions? That's the type of business that we're trying to drive. So it's much less of a cryptocurrency on-ramp that we have seen over the last 6-7 years in terms of how stablecoin have been primarily used. It is much more around facilitating cross-border trade, and that's precisely what we're focusing on.
You know, it's interesting, I've been asking, Web3 leaders such as yourself this question around security. What measures are you implementing to ensure the security of the stablecoin and its users?
So there are 2 aspects. One aspect is the actual system itself in terms of issuance, right? So these are fundamentally smart contract-based technologies that are enabling that token to be recognized on a blockchain, but as well as being secured and traced from a transaction monitoring perspective. So there are a variety of different technologies, including working with Chainlink on leveraging their proof of reserve capabilities to map the issuance of a token to the actual underlying reserve that's sitting in a traditional bank. So on the other side of it is obviously now connecting into the traditional bank. And that is both challenging and also exciting, right? Because a lot of the traditional banks are looking at this space as a new way for them to not only facilitate a new form of digital currency, but more importantly, to facilitate a new type of tokenized assets, right? So in order for them to do that, they then need to work with issuers like ourselves and integrate that technologies and make sure the traditional banking infrastructure and the tokenization issuance infrastructure can talk to each other. And that's a lot of the technical capability that we've been focusing on.
Right, of course you don't want to create silos at the end of the day, and that's the whole point of leveraging this type of technology. All right, Sean, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.